Kunal, coming to you first with the Nifty testing about 14,100 levels on the downside. Where do you think we're headed? Especially, it's a critical week as well. We're expecting the union budget to be announced in a few days, on Monday to be precise. So, do you see the choppiness to continue?
Morning, Karnya. Good morning, Varun. Yes, I expect the volatility to continue. I expect that the India VIX could probably be perched at these current levels of 23, 24 plus, and it should maintain these kind of levels. We've seen India VIX rising up higher, just prior to budget on many occasions. So this doesn't come as a surprise as such as well. But I think the larger part of the trend, and the correction what we've seen the last 3, 4 days is the fourth day on a trot for in the correction for Nifty, and we are now testing back below, that 14,000, 14,100 support. So this is a very important and a critical support level. It's not just a psychological support for the index, but it's also a very important technical support where a lot of call options and put options, those kind of round strikes are the ones which tends to get gravitated towards. So I think this is a very important level for the index. One of the other indicators which I am watching very closely is the put call ratio. It's a very I would say very important and very critical indicator to watch the sentiment bent for the markets. And I think as we speak, the put call ratios for Nifty and Bank Nifty, they are nearing very close towards the oversold territories. And whenever we've seen that happening, when these PCR ratios they enter into the oversold territory, and we see a strong bounce which could be leading into. So if there is any kind of a correction further in the second half and the index drops back below that 14,000 level, I would expect a sharper reaction on the upside to come across in the next couple of days. So in that aspect, I would suggest a couple of buy calls and two separate themes which I'm identifying. One of them from the low risk bucket. The first one is one HDFC Life. The stock is trying to take support at the 660, 665 zone. So if you remember, Karnya, that almost a month or two back, the stock, when it broke past about that 660 hurdle, it started a strong uptrend for itself. It rallied more than 10 to 15% beyond that as well, and it's now come back to testing this support trend line. So I believe that this is an important zone for HDFC Life, and if the stock manages to take support over here, possibility of a restart of a trend could be very high. So I'm suggesting a buy with an immediate target of 715. Stop loss could be kept at 650 mark. The second would be a buy on a mid cap name. It's about New India Assurance. Interesting chart. The stock has been forming a pattern of higher highs and higher lows in last 3, 4 days, like what most of the market stocks have corrected. Even this stock has corrected, but it's coming back towards its 50-day moving average. So it seems to be that the stock is now coming back towards its support levels, continuing with the pattern of higher highs and higher lows. I would expect a bounce till at least 140 on this stock. So a buy with a target of 140 and stop us at 125.
Okay, thanks for that, Kunal. Buy on dip strategy. Gaurang, good morning. Hi. I know the Geojit view remains positive on the markets, and I've heard you say buy on dips as well quite a few times over the last few weeks. So I'm not going to ask you what your take is on the markets, but I'm going to ask you today at 14,100, where are you seeing value and what are your calls for our viewers?
Thanks, Varun, and morning to all of you also. Yes, these are great markets to get invested in, and especially in times like this, Varun. You had a truncated week. For this week, we had a holiday on fallback of 26 January. Tomorrow we have the F&O expiry, and when we return to work next week on Monday morning, we'll have the Honorable Finance Minister present the budget. So this market can throw some choppiness and volatility at you, given the kind of elevated levels that we were in. But our view at Geojit is that in these kind of times, I think it is only prudent to look at some strong fundamental large cap names, given the correction that you see and the earnings that we have witnessed, especially for the third quarter. With these points in mind, we have two recommendations. First one is Reliance Industries. So we saw third quarter numbers last week on Friday post the market close late evening. I think on all parameters they were in line, and in fact the O2C, that is oil to chemical business, has thrown a tremendous amount of positivity. Medium term target stands at about 2300, and if I had to extrapolate it with a longer term time horizon, then on further improvement in earnings, I think we would not be surprised to see the stock going towards 2600. So Reliance Industries is the first pick, and the second one is from the IT pack. Again, a bellwether stock in the IT sector, which normally sets the trend for the IT earnings, and that is TCS. Upgraded our targets to 3,700 on TCS. I think in times like this, investors, especially retail investors who don't want to venture out into uncharted territories and want to stick with the basic principles, our sense is that these two names makes a lot of sense. Buy on dips and hold it for a long period of time.